Ira Epstein of Linn Associates with your agriculture update, and this is for Wednesday, and we're at the 26th of June 2019, just getting on to 2:10 p.m. Central Daylight Time. So a down day in the soybean market and the corn market. We're getting warmer weather, in fact, the Chicago area, but I'm just talking the Midwest. We're starting to get the heat. And that heat's coming through in a big way where we're going to get into the 90s. You've got humidity. There's still storms that are firing up, but at least it's beginning to feel like summer temperatures. And that's a change in the market. So now the market, after the weather fiasco that has happened throughout most of June, the market's in a pause. Now we see how the crops emerge. We see what's going to happen in the next stage. Remember that saying, knee-high corn by the 4th of July. We'll see what that is. It sounds so far away. Today's the 26th. You do realize it's only a week or so away that we'll be into the July 4th time frame. But that's what's going on there. The dollar very stable today. Most currencies just marking time. Stock market doing the same, as I think we're entering that phase where the market now looks to the G20 to see what's going to happen. That meeting starts on Friday. We know that Presidents Xi and Trump are going to meet each other. My instincts are the two will shake hands, the two will tell their negotiators to go back to the table, and no deals will end up being made. That is where my instinct lies on this, because I still think that President Xi is going to wait out President Trump and might as well see how he does in the polls before he agrees to anything. Plus, there's that face-saving issue. If President Xi does what President Trump wants with changing of property laws and so on, well, I don't know how that plays at home for him right now. So my guess is a lot of handshaking, a lot of bravado, a little bit of a pump in the market, and then not going to end up where you think. All right, so when looking at the weekly area chart of closes on soybeans, the market's down 8.5 cents for the week, so a bit of a correction. Support's back at 8.73, the 18-week average. It sounds far away, but it's 20 cents. That's nothing. The market, as you can see, has filled different gaps in the chart. This is the only gap not filled. And that gap comes in the 860 area. You know, could you get slippage if you head towards the 18-day average and fill it? You could. We have to wait and see what's going to happen. But a lot of us are still talking. We don't expect these crops to do well. They go in stages. First, you got to get them planted. Then you see how they're doing. And then you start worrying about what you've got. When we take a look at the swing line, this is a chart without the swing line. This is it with it. The one thing that's clear is there's a pattern of lower highs and lower lows. Therefore, the trend is defined by the swing line as to the downside, unless the market gets back up and over what was yesterday's high, because that's where it's at. It's going to be 941 and a quarter. So here we are from 941 back to the 918 level. The support hasn't changed from what we were talking about yesterday. The combination of the 118-day average, they happen to be the same number at this moment, 914 and a half. So that would be a zone that I would look for support to start showing up. When I look at Bollinger Bands, you hit that band and you have backed off in the market. It's all healthy, nothing wrong with that at this point, and momentum is turning down. So you've got momentum pointing to the downside. The bias is up because you're over the 18-day average of closes. That's what I define bias as. If you're over that number, up. If you're under it, down. So I've got the trend down, momentum down, but the bias up, and potential support at the combination of the 100-day and the 18-day average of closes. Meal's in a downtrend. Got the swing line down, the bias down, and momentum down. So support might be challenged here at the 311.90, which is the 100-day average, to the lower Bollinger Band at 312.10. At a minimum, I'd expect to see short covering develop at that point. Resistance back up at the 18-day average at 319.60. In the soybean oil market, here too, we have a market that had an outside day down yesterday. That puts potential support at the 18-day average of closes. Momentum turned down with you as well. Today the market goes to that number and stalled there because now it's going to wait and see what its brother and sister of the meal and the soybeans are going to do. In the corn market, we're in a corrective mode as well. The market's got a pattern of lower highs, and with today a lower low. Support right under the market at 450 and a half, about 4 cents from where you're at right now. That's where I'm going to look to see how the support comes in. I doubt you're going to get in December corn market with a lot of down leg to it, because so much of the acreage has been lost, and there's still so many questions as to what happens to the big states, the corn producing states that didn't get those crops planted. That doesn't mean every break's a buy. You go through phases in a market, but I've got doubts about a big decline. We'll see. In the wheat market, this is like, you pull a rubber band, it's all over the board. It reminds me of pork bellies at this time of the year. And there are no more pork belly contracts, but they wing all over the place. Higher lows, higher highs. Remember, this competes to a degree for feed now with corn, so we have to keep our eye on that. The difference here is you have an uptrend at work. You don't have that in corn. You don't have that in the soybean market. You are overbought. You haven't quite gotten up to the upper Bollinger Band again. In the sugar, I think today was an area where the pros probably did some short covering. The market's back down to the lower Bollinger Band. You'd have to get back over yesterday's high, and that number was 1266 to negate this downtrend, and we've been in a bit of a downtrend now for about a week and a half. Today, it hit some target numbers, that lower Bollinger Band. In the coffee market, will you get up to the upper Bollinger Band? I've got my doubts about it. You're overbought, you're in an uptrend, but you've come pretty far. This market might need to retrace back into the 18 and the 100-day average for support zone there. The close today was pretty miserable. If you look at the day's range, a pretty good size reversal. Then in the cocoa, you're in a downtrend again. You've got the lower highs, lower lows. I'm very aware as to what's going on in the Ivory Coast in Ghana, is they're trying to find some mechanism to guarantee producers some number. But it's like a cartel. And, getting these things done, if you don't have a lot of money for your key members to hold product off the market, not easy. But the trend down, the bias down, momentum down. This market's in a downtrend unless you get up and take out 2 days ago's high, and that number was 25.33. Barring that, the question is, do you just keep playing at this 18-day average as it's done, or does it try to embark on a downtrend? Obviously, I change my opinion if you get over 25.33. In the cotton market, a big short covering rally hit this market today. And you can see the market made a run to 67.60, the upper Bollinger Band 67.71. You couldn't hold the market up near that price. It gave back about 100 points of the gain, but it is in an uptrend, supports at 66.25. The momentum of the market is measured by the slow stochastic, trying to point up, didn't do a very convincing job of it. Then we get to the cattle market, and today the cattle market had a powerful day to the upside. As you can see, the previous high in this market was 105.82. You got to 106.10, so you negated the downtrend. And when we look back at the market, you can see that challenge of the Bollinger Band, that was it. And that doesn't mean you can't, keep going lower, but often that's where the pros take money off. The first resistance, the 18-day average, the market went through that, but that's all right. You can go through it. Wouldn't surprise me if it plays there a little bit. Where's the resistance? Upper Bollinger Band, but now you're moving in these swings like that. In the feeder cattle, you went up today sharply. This is limit bid. This is as high as the market can go today. My guess is it wants to go to that 18-day average to see what's up there. If you take out this number back here, this 130.50, 130, what is that number? Right here, that number is 138.50. Couldn't read it. 138.50. What happens is you negate this downtrend. Now, keep in the back of your mind what I've also been telling you. Each time we've challenged this 18-day average, at least going all the way back here into May, the market has had big problems. Is this going to be a change of events for the market? Last, in the hog market, the market's still sinking back to the Bollinger Band. This has just been, for the hog producer, the most disappointing time. No business out of China. He's looking at a market where there's plenty of pork in cold storage, and prices just keep eroding on him. Bear markets, well, they tend to make your life miserable if you don't learn to get out of their way. I talk about this and a lot more. What I do is I wake up about 5 in the morning. I do a good bit of reading right after that, and by 5:30, 6 o'clock at the latest, I start recording. And my videos, I'm not in them. I'm doing this, and if you will, this is exactly how the screen looks. I'm going to have more studies than you see here, and I cover in a very certain way 45 charts. I'll cover 40 futures and typically 3 to 5 ETF charts for you. So I'm assuming you've got an idea, you're coming to the table, whenever it is. You don't have to be live with me. I'm recording it for you. And in this very distinct manner, I'm going to review these markets. I'll already have known what's going on in Asia. I'll know what's taking place in Europe. I'll cover that to a certain degree with a brief tidbit talking about the markets. Then I'm going to walk you through the charts. And the idea here, unlike what you see in these, is I'm able to say buy here, sell there, put your stop here, go with the market, here's a strategy for you, whatever I feel like saying. The difference is this tape is a subscriber tape. Subscriber means you need a user ID and a password to see it. Under that auspices, the government says, yes, I can say what I want and throw out trade recommendations. But what's the real purpose? It's not my trade recommendations. It's if you have your own idea or if you're looking for an idea. Here's what I see in the marketplace. And I tell you, in today's internet, it's hard to get opinions. It's hard to get opinions from people that you want to talk to. I hold webinars. Now, during the summer, I don't hold anywhere near the amount of webinars I do in the fall and the winter time. But I do these every morning. Even when I go away on vacation, I get these done typically. The idea there to work with you to try to help you with the trade. Some people call me and ask me questions about it. I take the calls. It's that simple. So how do you get involved in this? Because it is super expensive by design. It's 26.5 cents a day to take a look at it. Your commitment's 30 days. You can stop your subscription at any time, and people do stop. I wish I could say everybody stayed with it, but most people stay with them and stay with them and stay with them because what you're looking for is an idea. Whether my idea is right or wrong, you want an idea, somebody you probably respect, and if you're watching these videos, there's a reason. You probably respect what I'm saying. So how do you get this? Go to our website under the word education or research, morning subscriber video. There's a whole facts section there. It explains how it works, what we do. You sign up right there and away you go. I'm Ira Epstein. You have a great day. I'll talk to you tomorrow.